a lot of guys struggle with, oh no, how do I find the daily bias? Oh, what do I need to do in order to find daily bias? The truth is, you probably already know daily bias, you just don't know that you know it. Be sure to stick around and watch this video all the way through to the end, because I'm going to be sharing some key insights that you're not going to want to miss out on. What is daily bias, right? What is it? Just put that out here quickly. Daily bias is literally what we anticipate price to do for the day. If we're bullish, we're expecting price to open, right? Go lower and then close higher. This delivery of buying here is our bias, and the structures that fall within how price does this is where we then frame our daily bias. Now, why is daily bias important? Daily bias is important because it gives us a framework and structure of how we should engage in price for the day. The easiest way I find in terms of framing daily bias is already having a higher time frame bias. So for example, if we have a higher time frame bias here, that's bullish, right? Say if we have this overall draw on price right here, we have this overall directional draw on price. What I'd anticipate is a few green daily candles drawing towards this price. And so what we're saying is that on most days, as price draws into this overall high time frame level here, we're literally anticipating price to open, trade lower, and then close higher. And that anticipation of this overall draw on price here is what gives us the daily bias. Because if we know the overall bias, we know, okay, on the lower time frame, we're bullish. And notice how as price continuously goes higher, it's continuously seeking previous day's high and rejecting going lower. So as price goes higher, we're continuously targeting the previous day's high. And what that does is gives us a framework of our daily bias. Because if we know that, okay, we know price is reaching for higher prices because we have an overall draw on liquidity. And if you haven't watched my video on higher time frame bias, be sure to go check that out to know the best way to figure out where price is reaching for overall on the high time frame, which then allows you to frame a daily bias. So knowing this information allows us to know, okay, on the day, I know price is reaching high. So my bullish bias is I want to see price open and aggressively target the previous day's high as my draw on liquidity as price reaches for this overall level here. And how price sets up on the day confirms if our bias is intact or not. And I don't want that to go over your head. How price sets up on the day confirms if we're going to have a bullish bias or not. What do I mean by that? If we're trading, right, and want to see price behave bullishly, how do you think that looks like from a point of power of 3, from a point of open, high, low, close? What we want to see is price open, make a low at the key time of day, indicating manipulation, and then distribute towards the overall draw on liquidity. And the distribution here is what we then trade. So if we blend, I need you to think about this. This is the key to understanding daily bias. If we know that there's a high probability chance that London usually makes the low of the day, right? So if we have a high time frame overall bullish draw on liquidity, so we're bullish on the high time frame, so our daily bias should be bullish, right? When price is bullish, remember how price sets up. That's the key to then unlocking the daily bias. If price is bullish, you want to see price trade below the opening price at key times of the day. That trade below the opening price is the manipulation aspect of it, because that's price telling you, okay, we have a high time frame draw. This move lower here is just manipulating so price can then go in its intended direction. The key to bias is literally understanding the key signature components on how bullish days form. So if you see London make the low of the day and you see London open, gives you a Judah swing, you see price start trading lower. What do you think that's indicating? People are thinking, sell, 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 sell. The market is drawing traders in. You know where price is heading towards on the high time frame, right? So when we see price give that Judah swing in London, a key time of day where we know when we're bullish, price likes to make the low of the day. What do you think that's suggesting to you? That's literally price telling you, okay, a bullish bias is most likely in play for the day based on the way it's forming. So I need you guys to really understand how price forms at key times of the day and around key levels is very important towards the overall price behavior and the direction price wants to go in. So let's say, for example, right, this is maybe New Day's London session open. So price made a low during the London session. And let's say now it's during the AM session, the 9:30 open. So in this situation here, we have our previous day's highs here. Remember, we have a high time frame drawing liquidity. We're anticipating, okay, price should open and close higher than yesterday's high as it progresses towards that overall high time frame level. So cool, we see London. London has a Judah swing, trades lower, right? manipulates people thinking, oh yeah, this is a market structure shift lower. No. We know what the high time frame draw is. We know this is manipulation. We see London make the low. London making the low of the day at the right time of day. That is key information that, okay, maybe the bullish bias is in play, because price isn't just going to manipulate and create a move lower only for it to then come back on it unless it hits a high time frame level. We have high time frame levels that are way above price. We have an easy draw off previous day's high. So there's a high probability that price manipulated and created a low in London so it can close higher than the previous day's high. And that framework there of seeing what London did and utilizing that for our AM session to then target the previous day's high as a drawn liquidity, that is the framework for our daily bias. So now think about what you're seeing as price unfolds. Price made a low in London, right? Cool. Let's say here's the 9:30 open right here. And remember, opening price is important because on buy days, smart money likes to accumulate longs below the opening price. If we've seen London made a low of the day, we have our previous day's high, which is our drawn liquidity, still intact. And in the AM session now, we see price open, trade lower, and what does it trade below? Trades lower below this low here, and then moves away from that key level it's traded into, right? Maybe creating a market structure shift, a confirmation, and inverse fair value gap as price moves away from this level. What do you think that's communicating to you if your bias is bullish? That is the framework for a bullish setup. And that's all bias is how price sets up and forms around structures and framework that when price is bullish, it should trade below the opening price. It should maybe trade into a key level, and that key level could be a 15-minute fair value gap below a 15-minute low. And we just wait for the confirmation of that, and then we start trading in direction of the high time frame and in direction of our draw, which would be our previous day's high. That's the closest draw on liquidity, which is in line with the high time frame overall draw on liquidity. And to make it sweeter, if you trade NQ and ES, right, cool, you literally see price trade lower, takes out this key low. Let's just say this is a 15-minute low, right? ES as well then trades but fails to take that low. That is a clear move and a confirmation of what people like to call SMT, smart money technique. NQ going below this low would be a signal that it was just accumulation, because if it wasn't, ES should have followed suit, but because ES failed to follow suit, that means that there's an underlying bullishness to price, and that further confirms what you're already anticipating for price. So this previous day's high is just going to be the easiest draw on liquidity for you to frame this setup and your setups around. You want to see price give an opposite move towards the intended direction at key times of the day. If you're an AM session trader, that's at 9:30. You want to see a move like this happen so you can then sit in on your confirmation and then trade in the intended direction of price. And that is all what bias is, guys. I think you guys overcomplicate because you're not looking at what is price reaching for overall on the high time frame. Because once you know what price is reaching for overall on the high time frame, framing a daily bias is easy, because then it's just about understanding the framework. Okay, I know price is reaching for this on the high time frame. I know price is reaching for this overall daily high here. I know there's a previous daily high that's still intact. If I'm bullish, I want to see price show an opposing move below the opening price at 9:30 or midnight New York time if we're trading the London session. If I see that, that indicates that that is manipulation and price is actually confirming my idea of what the bias should be. Sessions high become a target. Previous days high become a target. Previous 3 days high become a target as price creeps towards that high time frame direction. And that is it. That is all bias is, guys. So don't get confused. Oh, you say, I don't know my daily bias of the day. No. Is previous day's high still intact? Okay, then that's what you use. Did London make a low of the day? Okay, if it didn't, cool. You wait for more information and then you act based on that information. And that's where you want to be. You want to sit in the trades where the odds are so stacked in your favor that it's highly likely that price is going to do what it's going to do. And guess what? Sometimes it's not going to behave this. Sometimes it's going to print this perfect setup, and sometimes it might not behave in this way. But on the days that it does and you can catch it and you're consistently doing this, that's when you see a big improvement in your trading and your anticipator of daily bias. So don't get confused about, oh, I don't know what the daily bias is. No, you do know what the daily bias is. If you know accumulation, manipulation, distribution, and if you know how price manipulates at key times of the day, like I said, in London session, when price is bullish, usually makes the low of the day. In the AM session, if price is bullish, price usually trades below the 9:30 open and takes out some liquidity or trades into a key level. And that's all there is to daily bias, guys. So don't get confused. If you're bullish, you're literally anticipating price to aggressively always close above previous day's high. Obviously, some days you're going to have some down days. It's not always going to be full-on green candles like this. You're going to have some down days, but that is the framework. Until it fails, then you start looking, okay, what else am I then looking at? And that's beyond the scope of this teaching. That is all the framework and the building blocks there is to bias, guys, and I hope that made a lot of sense for you. If it did, leave a like and comment. Let me know in the comments below what you found useful, what you didn't find useful. And yeah, remember, I'm posting a video every day, so be sure to tune in tomorrow for the next topic. I'll catch you guys tomorrow.